Kathleen, your take on it.
Fingers crossed. Here we go.
It's those gremlins. They do it to me all the time. But no, seriously, yes, this is what was expected, that they quote unquote wouldn't do anything. But the more, it's always been about the messaging at this meeting, right? Because how hawkish would they tilt? I would say this is reasonably hawkish. The fact that they repeat what they've said, measures of core inflation remain too high, echoing Neil Kashkari in the United States. And when you say the measures are still too high, that means they have to come down. So if they don't come down enough on their own, you, central bank, are going to have to do something. And you both did notice that there's a small chance, according to their own forecast, of another small hike. I think it's also interesting that they do see recession starting, was it third quarter of next year? I'm looking at all these headlines now. But they're, and again, important that they're focusing on the core inflation rate. We have a tendency always to look at the headline, right? The headline's at 6%, but the core inflation, that's the one that can be sticky. So again, yes, I think maybe Adrian Orge was a little bit of a surprise, just the extent to which he's not sounding very confident yet about inflation. He's not promising, he's not signaling they're going to hike rates, they're going to be data dependent. I'm sure that's what he'll say. And when we talk about the slowdown, and you guys were mentioning that too, you know, in the land of adjustable rate mortgages, when central banks start hiking rates a lot, you're going to get hurt. You're certainly going to have your pocketbook hurt. And as someone was saying earlier, a lot of the adjustable rate mortgages in New Zealand are 2 to 3 years, right? So in this period of time, the ones who haven't had it adjusted up yet are going to get it adjusted up more. That's going to put more pressure on the consumer. So again, this is going to make the presser all the more interesting, isn't it?